No matter where you're starting from, imagine having 7 figures in your pocket by the end of 2025. The secret isn't magic, it's a laser-focused battle between a 92-stock growth portfolio and a strategic real estate empire. Today, I'm Martins, and welcome to Billionaire Financial Lifestyle Academy, where we turn billionaires in the making into living proof that smart choices build wealth, fast. If that fired you up, like this video now to fuel our algorithm and help more future billionaires find this blueprint. The wealth battlefield: stocks versus real estate. Before picking your champion, understand how each asset class wins or loses. Let's start with stocks, the compounding growth engine. Historical returns. The S&P 500 has delivered an average annual return of 10.26% since 1957. 11.34% from 1950 to 2023. Blockbuster years. In 2024 alone, the index surged 26.9%, outperforming almost every forecast. Compounding power: reinvesting dividends transforms modest gains into exponential wealth over time. Regular dollar cost averaging smooths out market swings. Liquidity and flexibility. Instantly rebalance, harvest tax losses, or redeploy capital within seconds. Now let's discuss real estate, the leverage and cash flow fortress. Appreciation rates. National home prices rose 4.5% year over year in February 2025, down from January's 4.7% but still above inflation. Long-term appreciation. Historically, U.S. home values grow 3 to 5% annually depending on the market. Rental yields. Average U.S. rental yield stands at a startling 8%, fueling cash flow and covering expenses. Leverage. With 20% down, banks finance the rest, magnifying your equity growth. A $100,000 property at 5% appreciation turns into $25,000 net gain with leverage versus $5,000 cash only. Tax advantages, depreciation, 1031 exchanges, and mortgage interest deductions / taxable income. Now that you see each powerhouse's raw stats, let's dig into how to construct and dominate with a 92 stock portfolio. Next is the anatomy of a 92 stock portfolio. Building a 92 stock cohesive rocket ensures you ride every market rally while smoothing shocks. Let us discuss sector allocation and screening. Core sectors: 60 stocks. Technology: 15 stocks for hypergrowth. Healthcare: 10, consumer discretionary: 10, financials: 10, industrials: 10, staples and utilities: 5 each. Satellite picks: 32 stocks. Energy, materials, real estate investment trusts, REITs, and emerging markets. Use screens: PE less than 20, ROE greater than 15%, profit margin greater than 10%, plus upcoming earnings catalysts. Let's go deeper building your real estate empire. Owning bricks and mortar adds a second wealth engine that hums with passive income. Finding high-yield properties, target markets: Buffalo, top forecasted growth; Indianapolis, Providence, affordable entry, robust job gains; rental yield leaders. Cities like Detroit deliver 21.95% yield thanks to low purchase prices and solid rents. Cash flow calculator: purchase price times 8% rental yield minus expenses, 10 to 15% equals net cash flow. Financing and leverage: conservative leverage, 20% down, 30-year fixed mortgage at approximately 6.5% rate. Reserve fund: keep 6 months of pity, principal, interest, taxes, insurance for each property. Scale with equity: once the first property hits 20% or more equity gain, refinance cash out to fund the next deal. Want a deep dive on how I financed my first rental? Drop a comment and I'll cover it in the next video. Risk, liquidity, and tax optimization. Balancing volatility, access to cash, and tax efficiency multiplies net returns. Volatility and liquidity comparison. Stocks: monthly swings plus or minus 10 to 20% in bear markets, but instant liquidity. Real estate: annual home price changes around 5%, but selling can take 30 to 90 days. Let's now talk about advanced tax strategies. 1031 exchanges: defer capital gains indefinitely by rolling sale proceeds into equal or higher value property. Depreciation: write off up to 27.5 years of building value, even when cash flow is positive. Tax loss harvesting: stocks: offset gains with strategic sales, reducing your tax bill by up to $3,000 annually. A very important aspect we must consider is supercharging with leverage and automation. Use technology and bank credit to amplify your returns, while staying in control. First, margin and mortgage synergy. Next, margin accounts. Borrow up to 50% of your stock investment value, investing the borrowed funds into high-conviction picks, but cap at 25% of your total equity for safety. Third, mortgage leverage. Spread risk by financing multiple properties. Just don't overextend beyond a 40% debt service ratio. Automate contributions and reviews. Automated transfers, $500 per week into your 92 stock brokerage, $1,000 per month into rental equity. Quarterly dashboards. Track portfolio versus rental ROI, cash flow statements, and net worth growth. Ring the notification bell now so you never miss an update on market-beating strategies. Here comes your step-by-step Millionaire Blueprint 2025. Follow this timeline to ensure you hit, if not exceed, your wealth goals. Timeline action item. May to June 2025. Finalize your 92 stock list. Open margin and brokerage accounts. Secure your first mortgage. July to September 2025. Deploy $500 per week into stocks. Close on first rental. Start tenant placement. October to December 2025. Rebalance stocks. Refinance for cash out to fund second rental. Harvest tax losses. January to March 2026. Review net worth versus goal. Adjust allocation if over or underperforming. Scale up contributions. April 2026 onward. Rinse and repeat. Continue dual engine growth, automate scaling, and compound your wealth. By blending the explosive compounding of a 92 stock portfolio with the steady leverage and cash flow of real estate, you create a dual engine strategy that has historically outpaced inflation and delivered market-crushing returns. Discipline, automation, and tax optimization are your allies. If this 12-minute blueprint lit the fire under your wealth goals, share this video with your fellow billionaires in the making. Let's build a global community of fast-track wealth creators.